Currently, the price of Tesla shares is less than 113. However, when January 2023 rolls around, what do investors expect from Tesla and what kind of price might we see in the markets because of its apparent volatility? Even the most experienced market analysts find it challenging to predict the long-term price of Tesla stock. So how much do experts think Tesla stock will be worth in the upcoming months? Tesla Motors Inc. The share price started 2022 at $352.26, but on December 27, 2022, it reached its lowest price of $109.10. This indicates a year-long decline of more than 50%. According to the extras, the price of a Tesla share will rise to $246 in the first half of 2023, a significant increase over current prices in the second half of the year. Adds an extra $54 to the price, raising the total for the year to $300 from the current level of about $200. Earlier this month, Tesla revealed intentions to reduce output at its Shanghai facility by about 20% in December 2022 compared to November 2022. China's zero-COVID policy has sparked protests all throughout the country. The Shanghai factory can produce 80,000 cars a month at full capacity. But Musk's acquisition of Twitter on October 27, 2022 for $44 billion has already had an impact on Tesla shares. In his most recent tweet, Tesla CEO Elon Musk stated that he bought Twitter, calling the transaction among the most expensive ever. Musk raised $15 billion by selling $15 billion worth of Tesla. Now that the acquisition has been completed, which will be a relief, Musk has committed not to sell any more Tesla stock. Musk also announced the departure of all of the company's highest-ranking employees, including the CEO. Investors and Tesla experts predict that this will lead to a rise in the stock price, but many people remain doubtful about Musk's abilities to lead Tesla, SpaceX, Twitter, and his other businesses. The total value of Tesla stock on the market dropped from $1.14 trillion in April to $718 billion today. Interest payments on Twitter's debt are expected to cost the company approximately $1.2 billion annually. Rates continue to rise. Second, Musk wants to increase Twitter's revenue and profit, with the latter occurring in 2025, according to industry experts' projections. As a result, Tesla's share price has dropped by 34 since the settlement was announced. Investors are concerned that Musk may become less focused on Tesla in favor of turning around Twitter, but given Tesla's devoted client base, the business is placing a greater emphasis on the Tesla Cybertruck and the Tesla vehicle priced under $35,000. The firm's hints that the new Cybertruck will be available within the next year have a good probability of coming true. Although Elon Musk predicts a slowdown in EVs and a demand for Teslas in Q4, he still intends to sell every vehicle manufactured. Tesla's commercial vehicle production line began with the Model S, but the company lacked good market control until it started mass-producing the more affordable Model 3 sedans. Customers need to be able to afford Tesla at a cheaper price despite recession risks due to weak growth and worry inflation. Due to a delivery shortfall, the cost is increasing, and transportation-related problems are to blame. Analysts anticipate that the current environment will be a test for Tesla Inc., and that the company's strategy for better inventory management will be crucial going forward in 2023. Nevertheless, Tesla management is unwavering in their belief that they have a vast application in plants that aggressively ramp up production in new factories like Shanghai, Lynn, and Austin on Monday. Morgan Stanley analyst Adam Jonas cut his price estimate for Tesla stock from 383 to 353. One explanation given for why the valuation would increase if Tesla management discloses its plans to repurchase stock is production challenges. Investors are calling on Tesla CEO Elon Musk and the board buy back shares after the company's stock price fell to a two-year low. A year ago, Tesla was valued at roughly $700 billion more than it is today. During Tesla's Q3 results call, Musk stated that the company is planning a sizable repurchase for the upcoming year, likely in the range of $5 billion to $10 billion, but that the final decision would be decided by the Tesla board to increase the ownership stake of current shareholders in the company by lowering the number of outstanding shares through market acquisition. This move was intended to benefit influencers and Tesla bulls. A modification has been made by alexandramears.org petition calling for its immediate reinstatement before year's end. According to Merge, this would enable Tesla to take advantage of its sharply discounted stock price and avoid the 1% excise tax that will be imposed on buybacks exceeding $1 million starting on January 1, 2023. Repurchasing shares would demonstrate confidence in Tesla's future performance and give investors their money back, as demanded by other and more involved investors. One petitioner, 5,807, stated, "I'm a huge fan of Tesla and a former stockholder, but in order to maintain my capital, I've been forced to jump to the dark side. I was able to regain half of my losses by shorting the stock. Before I invest in Tesla again, I need to see some kind of movement from the board, a strong buyback plan." Board members still believe Tesla is a great investment. For a number of reasons, investors' confidence in Musk's ability to properly lead Tesla has declined recently. Although Tesla's stock has been declining, investors are expecting a rebound by the start of 2023. Many developments, including effective chip scarcity management, can be credited to Tesla's ride and implementation skills in addressing chip. Scarcity, Tesla changed its programming and switched chips. Analysts predict that the EV market will keep expanding, with Tesla leading the way as a result of the stock split, which has increased the company's liquidity and made it more accessible at a discount, if not below value. According to Deutsche Bank analysts Emmanuel and Rossner, Tesla has a considerable technology and EV production edge over its competitors, a year in which Tesla keeps up its rapid volume growth, enters new markets with a Cybertruck, semi-optimizes its manufacturing footprint, and benefits from a reduction in IRA inflation. He stated, Rosser also mentioned that there is a lot of room for fully autonomous vehicles, which could increase gross margin by 80 basis points and improve worldwide take rate on new sales by 5. However, since this is not in our base case scenario, we expect the 2023 street projections to be revised upwards with these variables Wall Street attributes: the improvement in investor morale in the first 2 quarters of the year, to optimism about new government regulations that will encourage the adoption of EVs in 2023, beyond, and Tesla. Prior to this, investor morale had slightly declined in August due to concerns about foreign markets. Though we predict a more modest increase of 2 basis points in gross margins to 31.5% in 2023 from 29.5%, 300 basis points improvement from 2022 levels, as well as an increase in adjustment EPS of 7.15 from 6.60, which is significantly above the consensus estimate of 5.82 cents. Rosner estimated cost savings of $3,200 per vehicle, or 5.5% of the ACE. The demand may be increased in 2023 if Tesla introduces its Cybertruck and semi-vehicles as recommended by Rosner. In the future, we hope to see an increase in both the gross margin and operational margin as volume increases. The lower pricing won't be Tesla's only benefit. Rosser thinks that Tesla, which benefits from a superior cost structure, is one of the most interesting tales in the automotive business because of its strength and price. Properly implemented plans. If you're looking for the most recent details regarding guaranteed supply and new large capacity to meet quick expansion, to stay updated about Tesla stock, please subscribe to this channel, hit the like button after watching, and I'll see you in the future video.